Hello, everyone, and welcome to Techopia Talks. My name is Michael Curran from the Ottawa Business Journal. Thank you for joining us today in such great numbers. We are here today to talk about a very relevant topic for lots of the city's startups and technology companies, and that is how to raise capital in a pandemic. And we've assembled a great panel to discuss this today. Before I introduce them, I just want to tell you a little bit about Techopia. So Techopia was a spin-off brand from the Ottawa Business Journal that was started about 5 years ago. In fact, the anniversary of Techopia is right around now. I should know the date off the top of my head, but we're right around, and we were going to have a party. In fact, that's part of the reason why we're doing this today. We were going to have a party. We can't do a party. So what else are you going to do these days except do a Zoom call? So yes, Techopia was a spin-off brand from the Ottawa Business Journal that really is addressing the editorial information needs of the city's technology startups and established players. So let's introduce the panel here today. We've got a lot of great people on the line, and I'll make sure I get Tim on as well. So first off, Jen, how are you doing? Jennifer is representing the Capital Angel Network, a group of local angel investors that's operated for about 11 years. That's incredible, Jen. And the group has invested more than $20 million into 60 early stage companies. That's quite remarkable, Jen. Thanks for joining us.
Well, thank you, Michael.
And next we've got Pablo Sergo from Mistral Venture Partners, which is plays a really unique role in Ottawa because it's a seed stage venture capital firm. So there are not many of those, and I'm being generous when I say that. And before joining Mistral, Pablo was the co-founder and CEO of a really well-known startup called GymTrack, which was a VC-backed startup in the fit tech. And he's also an entrepreneur in residence for Invest Ottawa and active in Techstars Montreal. Hello, Pablo.
Hey, everyone. Thanks for having me.
And we got Susan Richards next. Susan is the co-founder of a local company that provides CFO, controller, bookkeeping services to a number of startups and established players. And when Susan's not busy doing that, she's the chair of Invest Ottawa. So she's playing a really special role in the community, helping out with people's finances and also leading the city's economic development agency. Hello, Susan.
Hello, thanks, Michael, and happy anniversary.
Yeah, I wish I brought cake, but I don't know how we would eat it together. And last but certainly not least is Tim McCunn from Perley-Robertson, Hill & McDougall. And Tim is, first of all, Perley is a locally headquartered firm, something that I really appreciate, that's done business with local entrepreneurs and business owners for many years. And Tim's practice specifically is focused on corporate commercial securities law with an emphasis on M&A and corporate finance and technology and life sciences. Hello, Tim. And I'll get you unmuted. There you go. But Pablo, we're going to start with you. So really, the big question that's in front of us right now, Pablo, is what is happening in March. Of course, we had an incredible health and economic crisis take hold. And we're curious from a venture capitalist perspective. Please share with us what you're seeing out there right now.
Yeah, absolutely. I'd be happy to. And thanks, Mike, for the question. So, just taking a few steps back, like you said, this all started. Well, it really started to hit kind of the venture community, I would say, in March when we all started to realize, just kind of the extent of what was going on. And the chain of events was, by April, almost certainly ourselves, but nearly every VC I spoke with was on complete pause. I mean, everything was frozen. They weren't taking any new calls. They weren't looking at any new deals. It was just, what's happening and how can we help our current portfolio companies. That involved a few different things. Speaking for ourselves, it involved, in some cases, unfortunately, it did involve layoffs. In other cases, it was just extending cash runway. In some other cases, whether luck or not, the companies actually were properly funded and so didn't need to necessarily make many changes. But regardless, all of the attention was on that. And then as that problem has an end date, right? Like at some point you fix that, and you have some companies that maybe can't be fixed, but the vast majority can, and you did what you needed to do. And then you're back to the normal game in a sense, right? So come May, I would argue, at least for us, and I do speak with a lot of VCs as well to get their take on it. It's kind of back to business as usual, but I don't want to overstress that, right? It's not like we've forgotten that there is a pandemic and that there is a bunch of headwinds, but at the same time, most of us have funds and we deploy them. That's what we do. So that's still happening. So I would say there's a few different pieces. Like you have firms that actually see this as more of an opportunity, and I think we'll speak more to that later. But there are some firms that are looking at this and saying, you know what, this is a great time to deploy capital. Whether it's because there are better deals to be had, or whether it's because really this current kind of recession is very different than the 2000 or 2008, and that technology seems to be coming out quite strong and seems to be maybe what's going to lead us out of this. And so that's a great tailwind, and trying to identify companies that will benefit from that, not just in 3 to 6 months, but longer, right? Anything in e-commerce, future work, etc. Those are interesting opportunities today that you may get at not crazy prices because of everything that's going on. But you do have other VCs, other investors that are still skittish, right? And that are still hesitating to put too much money at work. And when they do, some of the things that are now being considered are, I think we saw this before with the WeWork fiasco and all this stuff, but capital intensive businesses, growth at all costs, it's not as sexy as it was 2 years ago, and it's even less so due to everything that's going on. So in general, I would say VCs want to see great unit economics, companies that can clearly be profitable if and when they decide to be, and generally longer runways, right? I think a lot of times we would fund companies for 12, maybe 18 months. Now it's 18 months plus, right? Because we don't know, because there's so much uncertainty in terms of how things are going to, there could be a second wave, there's just so many things we don't know, so better to be safe than sorry. So that's how I would describe it. Like, again, there's some pocket of firms that are like, this is great, let's deploy, maybe they just raised a new fund or whatever. And then there's another bulk of firms that are kind of still deploying capital, still, taking the Zoom calls, but maybe hesitate a little bit more to actually spend money. And on that last note, the Zoom piece is interesting, right? Because as VCs, a lot of what we do is we fund companies, but we fund teams. And not being able to meet someone in person, there's obviously something to that. And it's not helpful. So there's some that even just on that bar have said, I've heard things like, we're only going to do deals with founders we've met before. I don't know how long that can last, run out of those, but these kind of things are happening. And so it's good to take that into account.
Well, that's a great way to kick us off. Thanks, Pablo. Jennifer, I'm going to go to you next. Before I ask that question, though, to get that angel investor perspective, I just wanted to remind everyone on the call that we're going to move quite quickly. We're going to start sharply as we did at noon and try to wrap up at 12:30. There's a Q&A opportunity, and my colleague, Peter Cavesi from Ottawa Business Journal, who's also the co-hosting a lot of our podcasts for Techopia, is going to be looking at the Q&A function, and we're going to roll a poll, in fact, a couple polls here in a couple seconds. So Jen, let's come back to you. So Pablo gave us the venture capital. You play kind of a different role in the ecosystem, and I just wanted to share a little bit more information about your organization. So maybe start us off there. And so what role does Capital Angel Network play in Ottawa? And then maybe the double-ender question would be, what are you seeing in the marketplace right now?
Yeah, so Capital Angel Network, we come in a little bit earlier, typically than Mistral would, and definitely earlier than most VCs. Mistral, being a seed VC, will come earlier than quite a few of them. Angel money is frequently the first money in. If it's not the first money in, it's following friends and family money that goes into companies. So, yeah, and then in Ottawa, we have almost 50 members of Capital Angel Network. And in a typical year, in the last few years, we've been investing around 4 little over 4 million into the local economy.
That's right. So that would be an annual number over the past several years. Okay, good.
Yeah. And so an important part of the Ottawa tech ecosystem, typically angel money bridges from government grants such as IRAP and things, bridges from there into VC. So the bulk of the money that goes into companies pre-VC is actually angel money. Angel money is a little different. So Pablo mentioned that a lot of the VCs have funds. How long can you actually sit on that fund before you decide, okay, I'm going to start investing again. I'm going to figure out how to do this. Angel money is personal money. And so one of the things that we did early on, so around the end of March, everything shut down, so mid-March, was check in with the angel group because, of course, the stock market had a fairly significant drop. Some of that has recovered, but there's still a lot of volatility with people's personal finances. So what's the mood out there? What we got back was the majority of the angel investors are still prepared to invest. So that was really good news for Ottawa. There is a preference to help make sure that the existing portfolio companies can get through this. Ones that we think are in good shape to get through this, because there is a recognition. Pablo mentioned, VCs invest on relationships, so do angels for that matter. It's a little harder to build that relationship on Zoom. Not impossible. We have actually closed a fairly significant size deal post-pandemic, post-lockdown, with quite a few investors that only met the founders on Zoom. So it can be done, but it is more difficult to build that relationship on Zoom. And for the founders in the audience, one thing to think about is how you present yourself on Zoom, how you build that relationship, how you reach out to people, how you make sure that overcompensate for the fact that we can't meet you in person right now.
That's interesting.
Yeah, and on and we did. We've got an initiative called She Boot, which is a investment ready boot camp for women that we're going to run in the fall. Applications are open now. We were a little concerned just before we opened applications whether we'd be able to go through with that because there's a $100,000 investment for the winning company. But we did check with the women involved, the female angels involved in that, and everybody was prepared to still go forward, still make that investment. So I think, from that perspective, the angels are prepared to invest, keep the ecosystem growing. They do see this as a good way to deploy capital. So that's all good news for investors. I will say there's a lot of scrutiny now on do you have cash management in place? There is a view that if you're doing angel investing now, it could be a while before you could get VC funding. So because you don't already have those VC relationships, and there are VCs that are putting preference on founders they already know. So we're saying to our companies, when you come in and pitch, show a plan that's realistic. Show that you've taken into account the likely investment climate, that it could be longer than you hoped before the VCs are prepared to come in.
Okay.
Company and factor that in. And I would say that businesses that are in the hospitality sector might not be, as investable right now as ones that are in the remote work, healthcare, e-commerce type.
Yeah, there's going to be a sweet spot certainly coming out of this, and that's becoming more and more apparent as the weeks go by. Susan, there was a couple of things that triggered a natural transition, I think, to you. And maybe we'll start off with, you have two hats to wear here potentially, but we'll start off with your number crunch hat. CFO, Jennifer was just saying, an ability to demonstrate cash flow management and that type of stuff. But anyway, put your CFO hat on, and I'm sure you were among the first phone calls people were making as this set in. So tell us about what you're seeing.
Yeah, it's, every day I do a lot of meditation before work and partway through the day because every conversation is really quite different and distinctive and unique. In consideration for this conversation, though, I think a couple of key things are businesses right now really need to know what their cash flow plan is. And they don't just need one, it's about scenarios. So the uncertainty still exists. For some, it's an opportunity to actually escalate and accelerate their growth. But for many, it is having a stalling effect on their revenue and their customer acquisition. So a couple of things that keep in mind are what are the cash needs? And I think EBITDA is more important than ever. Understanding when your organization is going to get to EBITDA positive in a few scenarios is important. Revisiting all of the government funding. It's been incredible. It's also been iterative. So information, for instance, on the Canadian Emergency Wage Subsidy, the 75% CEWS subsidy, it came out in a very iterative way as information hit the market and companies had an opportunity and leaders in the ecosystem had an opportunity to weigh in and give feedback back to the government. They came back and iterated it to make the eligibility more expansive. And I continue to come across companies that didn't think they were eligible, and they are. They didn't think they were eligible for multiple periods, and they are. So I think one of the things that could be really important for companies is ensuring they understand all of the programs that are available to them, because that allows them to amplify the the investment that they have, so that they can stretch those angel dollars in order to get themselves to that VC position. So multiple scenarios, addressing COVID, and I think focusing on relationships. I think a lot of these relationships have kind of gone on COVID pause. We're not colliding with each other like we normally would throughout the local events. And so I think those companies that stand out and reach out to existing investors and reach out to investors that they had been considering to keep them up to date on what their plans are. I think they would probably stand out because from what I can see, I don't think there's a lot of that proactive communication happening right now. People are too much in the details of the minute, navigating their planes through this uncertain time. But I think a little communication and leaning in on those relationships could go a long way. And I also think we wouldn't want to err on assumption. It's easy to assume there's no money out there. There is money. It's easy to assume customers aren't going to buy. They may buy. Look out for your channel partners. Some of those larger companies are interested in helping the smaller companies along the path. What's great is that tech startup entrepreneurs have all the natural personality tendencies to navigate through uncertainty. This is just what I'd consider as a hyperbole of all of the different attributes that a tech startup has to deal with. So those are the thoughts that come to mind straight out of the gate.
Yeah, that's excellent. Thanks for that, Susan. And Tim, we want to bring you into the conversation, of course. Susan shared kind of that CFO perspective. You've practiced law and corporate securities and many related topics for many years. In the preamble of today's meeting, you said you're really busy. So what's going on? What's going on from your perspective?
There's an old saying, right? When times are good, we're busy. When times are bad, we're busy. It's just a different kind of busy. I mean, that's lawyering. But, I would just start off by saying when I look at this title that you have for your seminar,
yes,
it brought to mind two thoughts. One is there's sort of a micro answer and a macro answer, right? So on the micro side, obviously, anybody who's trying to raise money is going to have a new slide now, right? Which says this is how COVID impacts our work, right? And there are companies that are raising money, and I'll talk briefly about all the deals we're doing, because on a micro level, this has helped some companies. So I do, for example, I'm working on a digital therapeutics on the biotech side, if you can believe it. There's actually a digital therapeutic side to that business, and I act for several companies like that, and there's tons of interest in it, right? Because everything digital is right. In fact, I would also say one thing that's happened in this this pandemic is it's really highlighted the importance of technology and biotechnology, right? So all the big tech companies are doing very well, right? I mean, the one, you know, the Amazons to the Googles and all the rest of them. And then of course, biotechs are doing generally pretty good. A lot of them are raising a lot of money. So that would be sort of the bright side here. But so I call that the sort of micro level, but on the macro level, the big question and everybody's asking and everybody's got an opinion, is it going to be a V recovery? Is it going to be a WWW, whatever recovery? And that's to me the big issue. And I'm probably the oldest member on this panel. I hate to admit it, but it's pretty video. But I've been through a bunch of recessions. So the question is, are we getting into a big recession here or not, right? And so, you know, recessions, generally speaking, are not great for the investing environment, right? You've got, you know, the market multiples for the big public companies drops. You know, you've got more unemployment. You've got less cash in the system, and generally speaking, that's what you see. And so everybody hunkers down. You heard a little bit about today. Everybody's battening the hatches, pausing, doing whatever they have to do, because first they look at their portfolio, and there's layoffs and cash preservation and all the rest of it. I call that, you know, Darwin mode, right? Survival mode.
Survival of the fittest.
So that's what my first comments would be. The other thing, just you mentioned in the office, look, I mean, we're as busy as we were pre-COVID. So I'm not saying we're busier.
Yeah.
We're just as busy. I just give you a quick list. We did a bot deal on the public side, and that was publicly announced. It's the Martello. You know, they spoke at one of your earlier conferences.
Yeah, hit the headlines. Yeah.
Selling a couple of private companies. You know, one deal is 23 million, and then I got 3 financings that we've done in the last 2-3 months. One's 90 million, one's 45 million, and another one's 105 million. So, as somebody said, there's cash out there. For sure, there's cash out there, and deals are getting done. And lastly, and I'll shut up at this point, in terms of opportunities, there are, you know, people and, you know, the brave, I guess, and I think I count most VCs amongst that group because it wouldn't be VCs otherwise.
Yeah.
But with cash, viewing opportunities, and you know, again, it's cash is always important, and if you've got capital backing, and you know, again, sort of in the survival of the fittest mode, are there acquisition opportunities, bolt-ons, whatever? And so we have a lot of that happening in my office as well.
Peter, why don't we go to one of our polls now? Take the pulse of our viewers here. So I'm going to launch that on screen for everyone, and maybe you can set that up, Peter, for us.
So we know that since the onset of the pandemic, so many businesses had to just, if not abandon the plans that they entered 2020 and altogether certainly evolve their plans. So we're thinking specifically for those companies that are investment ready, what should their focus be right now in the current environment? And just while everyone does vote, just a reminder that there is a Q&A function at the bottom of the screen. So if you have a question for any of our panelists, please do drop it into that box.
And we got a number of votes coming in. In fact, as we wrap up here, the poll, Peter, maybe I'll go to you for a Q&A quickly right after this. So if you want to glance at the Q&A. So we'll give the polling a few more seconds here, and we'll share some results. What do those look like to you, Peter?
Interesting. I that is based on the comments from our panel of experts that cash preservation would be a bit higher.
Yeah. And anything coming in on the Q&A that you want to pinpoint at this point, Peter?
There was a question for Jennifer. I'm paraphrasing the question a little bit, but it's really just sort of about the I guess, the interest of her members. So what are angels right now looking for as far as investment opportunities? What are the priorities of angel investors at the moment?
So what are the priorities, Jennifer, of angel investors, if you want to take a quick stab at that?
Yeah, so just on that question, so we did do a survey of all of our members, and we asked them, were you going to stop angel investing, reduce your angel investing, keep your angel investing the same, or increase? So over half were looking to keep their angel investing the same. A very small number were looking to stop. A few were looking to decrease, and a few were looking to increase. The ones looking to increase, we're seeing this, as Pablo had mentioned earlier, as potentially a good time to invest. One from a terms perspective, but also, and I've seen a couple of downturns. I don't know if I've seen as many as Tim, but a couple of downturns in the market. And you can do really well in a downturn in the market with the right value proposition. And so investors, so the angels are looking for those value propositions, people that have a strong value proposition for remote working, healthcare. Healthcare is very popular right now. And one of the things I would say in the healthcare front is, I don't know how many of you follow telehealth, but something that was a very slow discussion.
Yeah.
Can you really do it? Does it make any
work? What's the privacy concerns?
And then all of a sudden it's like, okay, we're shut down. 2 weeks later, telehealth is up and running. And oh yeah, it does turn out you can do telemental health. And, so there are a few value propositions like that went from a slow, long cycle. Yeah. A very quick, okay, now I'm just going to buy. And so I think angels are looking for those opportunities where the company might have had a much longer sales cycle pre-pandemic, because it was a nice to have for remote workers, because I could call somebody in. It was a nice to have in terms of telehealth, because I can just see people in my office. So things like that have gone from nice to haves to must haves. And in every downturn, there's always a portion of the market where that happens. And it's finding those, because they can be really good opportunities for investment.
Pablo, so let's go. Go ahead, Tim.
Quickly there, a great example, right? Timing's everything in life, but there was a great company here called Magor, one of Terry's companies, great video company. And, tell them that health was part of it and everything else. They couldn't keep it going. If they would have today, they would have got funded, right? So,
what an interesting point, Tim. And Pablo, what are you seeing in terms of opportunities? So there's the obvious ones, the Zooms and virtualization and that type of stuff. But when you put your VC hat on, early stage, Pablo, what are you seeing? What do you think?
Well, yeah, you've got your future of work, you've got your e-commerce, and everyone's talking about them, but they're real and they're big, and they're the kind of trends. What we're interested in is the kind of trends that were already there before COVID and have simply been accelerated as a result, because that's the kind of trend you can bet on long term. Yes, maybe as things go back to normal, that acceleration slows a bit, but you've got a long history of growth in those sectors. And so the way we think about it is, what we're looking at now, what we're experiencing is basically a forced trial of tech, right? And what happens when you give free trials to customers? Some of them continue on and pay, and some of them churn out, but some of them continue on and pay. And so when the whole world starts trying a bunch of new tools and new ways of thinking, some of those aren't going to go back. And so you've got a real shift. So where does that play besides those obvious areas? I think automation and digitization are another big one. So we get pitches all the time in the form of, I've got this tool, this AI, this tech, whatever it is, and it makes this process more efficient. And I think to Jennifer's point, like that tends to be a nice to have. It's like, sure, that it'd be great to be more efficient, but you know what? I got these other 10 things that are going to help me grow faster. And I'd rather focus my efforts on that. And I'm being, the enterprise or whatever, which is what we focus on. I think today when you're in this uncertain environment, you don't know what's going to happen to your revenues. You don't know how to forecast this. You're looking at your cost centers a lot more carefully and saying, how can I, whatever happens top line, how can I operate more efficiently? And so there's, I think, a lot of these a lot of these products and services, software products mainly, that are driving efficiencies, whether it's time saved or whatever, that now I think rise up in terms of priority and become a lot more interesting.
And Susan, maybe you can put your, maybe this is a good one for your Invest Ottawa hat, because, you know, Invest Ottawa is at the center of this ecosystem, is seeing new opportunities all the time. But, you know, I don't want to diminish this suffering and pain and layoffs and even loss of life in some cases. But there are economic opportunities here. So what are you seeing or Invest Ottawa seeing?
Well, I think as was pointed out, the bioscience, you know, historically had a really slow funding cycle. The money moved very slowly in that type of business structure. And in these days, there's a huge opportunity there. So I think having an organization like Invest Ottawa is helpful in congregating the community opportunities to enable businesses to be able to help keep traction. And we have a number of cases of pivoting where particular industries, some tech startups that support offices, for example, have pivoted. I think the opportunity is, we're not through this yet. I think we're going to have multiple quarters ahead of us where we're going to get slowing up in existing runways, and we're going to have more opportunities present themselves. So I think just having that nimble attitude that we're looking to see what the needs are and having a fast cycle time. Invest Ottawa has been very closely connected to the government as also with the startup entrepreneurs in identifying needs and opportunities and making a very fast cycle. And I think that's what we have to just keep that iterative approach so that we can capture the opportunities. But certainly there are opportunities. We still don't even know our needs. Like, we're, as humans, craving social, and we don't even know what we're going to, like, what opportunities might satiate our appetite in a quarter. We didn't know we needed Zoom this badly 4 months ago, for sure. So I think just keeping eyes and ears open and collaborating, all of that stuff, it's still to continue. This is going to be a while.
Change is afoot, as they say, Tim.
Yeah.
Change is afoot. And I don't mean physically afoot. You know, change is happening. Tim, give us your sense of this too. So, you know, you're talking to lots of companies, people seeking investment, the investors, bring people together from a legal perspective. What would you say? And have you noticed anything in terms of opportunities?
Yeah, no, and I think it's I think it's already been said, right? So people that are in biotech, for example, I mentioned digital health, for example. I mean, you know, those things are being highlighted here, and so it's never been better for them in terms of pitching, and so that's an opportunity. I mean, not a tech thing, but I'm doing a lot of PPE deals, if you can believe it. I mean, those are people are buying. It's a bit of a mad scramble out there in the world, really the wild west. And so we're acting for a couple of PPE type companies, whether they're brokerage, distributors, you know, Chinese. So that's, you know, definitely an opportunity. Yeah. And it's not going to stop. At least that's the view of most epidemiologists, right? We're going to see more of this until we get a vaccine. Yeah. DIP financings, you know, again, not tech opportunities, not raising money. DIP, for those who don't know, debtor in possession, right? So doing a bunch of those. Okay. And again, I think the good news is it's a good time for tech, biotech, in the right parts of the industry. It's actually highlighted how these things are the winners, you know what I mean? In a tough one. So listen, we're running a little long. Peter, why don't I want to make sure some people in our audience get a chance to ask some questions in that. So maybe I'll go to you next and see if there's anything that people want to dig into, and then we'll start wrapping up here.
One more question. This is actually a good one. Here's if we can have our past comment on what is the current role of BDC and how are they in Ottawa's ecosystem?
So you're breaking up a bit, but what I heard there is, what is the role of VCs in the ecosystem? Is that what I heard?
EDC, the Business Development Bank of Canada.
Oh, pardon me, EDC. I don't know. Maybe Susan Susan, you want to take
Sorry,
EDC?
BDC, Business Development.
Okay. BDC.
BDC,
Susan.
okay. BDC is playing a big role for companies. So basically, they rolled out their COVID loan to start things off. It was one of the first programs that came out, and it enabled businesses to essentially submit 2 forecasts. This is how the forecast would have looked before COVID. Here's what's happening in light of COVID. There's a tremendous savings from an interest rate. They're lending money at interest rates that are unprecedented. It's a long-term loan. There's a balloon payment at the end. So basically you have utilization of the cash for longer than normal. And they did get backlogged. So I'll say that it's been slow to get the money in the hands of people, but that's just because it was the first program that was available. So definitely BDC is doing great business to keep companies afloat right now, and worth reaching out to. There's lots of reps. If anybody needs an intro, link in, connect with me, and I'm happy to introduce you to a local rep as well.
Yeah, I had heard from some BDC people that are working around the clock, quite literally,
They
just
are.
trying to get through that backlog. And I know they were reaching out. It took some weeks to get through. So listen, I can't believe that we blew through this time. We thought the 30 minutes would be enough, and in a snap of a finger, it's all gone. So I will start the wrap up now, and I just want to recognize, as we do that, some of the great sponsors that line up behind Techopia, and we have 2 of them on the call here today. So we have TD, Perley-Robertson, Hill and McDougall, Number Crunch, represented here by Susan. Tim representing Perley, of course, University of Ottawa Engineering Department, and Stratford Managers, all really important companies that are helping local tech startups. I also wanted to note that Stratford has a number of programs to help people, as you can see here on screen, to manage manage through uncertainty with their support. Stratford has a diverse range of offerings. And of course, the University of Ottawa as well. The engineering school really is one of those mechanisms, institutions that provides the talent that helps fuel the technology innovation. So I want to thank all of them, and thank our panelists. Thanks for all your time and expertise. To you, Pablo, great role, and Mistral plays a really important spot in our city. And Jennifer, you too, organizing all those angel investors, and to our 2 expert advisors, Susan Richards and Tim McCumb. Thank you very much for your time. We will be posting this video to obj.ca and our YouTube channel, and I encourage everyone to keep on watching obj.ca. It's updated throughout the day with new news stories. Last time I counted, I think we've done about 130, 140 COVID-19 related stories. So I think we're really on top of that, and been trying to do some online events today. So for Peter Kavesi and the rest of our panelists, thank you for joining us, and please stay connected. Thanks, everyone. Cheers.
Thanks, everyone.